Tonight, we bring you an important development that directly affects millions of Nigerians, including workers, business owners, and employers across the country. The chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Taiwo Oyedele, has issued a strong nationwide call. All Nigerians must file their annual tax returns. Failure to comply, he warns, is a violation of the law. This announcement comes as Nigeria intensifies efforts to reform its tax system, improve revenue generation, and strengthen transparency in public finance. Stay with us as we break down what this means, who must comply, deadlines to watch, what changes under the new tax reforms, and why government says compliance is no longer optional. Chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Taiwo Oyedele, has urged Nigerians to take their tax responsibilities seriously by filing their annual tax returns as required by law. Speaking during a webinar organized for HR managers, payroll officers, chief financial officers, and tax managers in collaboration with the Joint Revenue Board, Oyedele stressed that both employers and individual taxpayers must comply. The webinar, which was later posted on YouTube on Friday, focused on practical guidance regarding tax compliance, new obligations under tax reforms, and consequences of non-compliance. According to Oyedele, Nigeria is facing a serious challenge with tax compliance, particularly in the area of self-assessment filing by individuals. Oyedele disclosed that compliance levels across states remain extremely low. In his words, "This is one area where we have been non-compliant in Nigeria. In many states, more than 90%, even the most sophisticated states, cannot boast of 5% filing returns. This means that in several states across the federation, less than 5 out of every 100 eligible taxpayers actually file their annual returns. For a country with over 200 million people, this statistic highlights a massive gap in Nigeria's tax culture." Oyedele reminded employers that filing annual returns for their workers is not optional. He said, "In terms of filing returns, you need to file annual returns as employers for your employees. Many of you must have done that already. If you haven't, you have just a couple of days left to file those returns, including projections of how much you will pay your staff." This means companies and organizations must submit annual employee tax returns, salary projections, payroll information. Failure to do so exposes employers to penalties under Nigerian tax laws. Tax experts say this requirement helps tax authorities track workforce earnings, verify deductions, detect underreporting, and improve revenue accuracy. One of the major misconceptions Oyedele addressed is the belief that employees have no further tax obligations once their employer deducts pay-as-you-earn (PAYE) tax from their salaries. He describes this assumption as wrong. According to him, many people assume that if they are an employee and the employer has deducted pay, they don't have to do anything. That is wrong. Both under the old and new tax laws, you must still file your returns. This means salary earners, contract workers, freelancers, public servants, private sector employees must all file self-assessment returns regardless of PAYE deductions. Self-assessment is a system where taxpayers declare their income, calculate tax owed, and submit returns to tax authorities. It allows tax agencies to cross-check employer records against individual declarations. Experts say self-assessment promotes accountability, transparency, accurate taxation, reduced tax evasion. Oyedele emphasized a clear deadline. All of us must file our returns, including those earning low income. You must file returns by 31st March of the year in respect of the previous fiscal year. This means, for income earned in 2025, returns must be filed by March 31st, 2026. Missing this deadline could lead to fines, interest charges, legal penalties, possible prosecution. Another important clarification made by Oyedele is that low-income earners are not exempt from filing returns. While some individuals may qualify for tax reliefs or exemptions, they must still file returns to declare their income status. Don't forget to subscribe and share. Your support means a lot and motivates us to continue serving you with trusted information. Tax officials explain that filing does not automatically mean paying large taxes. Instead, it allows government to identify income categories, apply reliefs, and offer exemptions where applicable. Oyedele acknowledged that Nigeria's tax filing process has historically been difficult and intimidating. However, he assured Nigerians that authorities are working to simplify the system. He said, "I'm sure the tax authorities, joint revenue boards, and various state internal revenue services are working on how to make this process simpler and easier. This includes digital platforms, online filing portals, simplified forms, and automation of processes." The goal is to remove barriers that discourage compliance. Nigeria faces serious fiscal challenges. Revenue from oil has declined. Public debt has increased. Government spending obligations continue to rise. Experts say Nigeria's tax-to-GDP ratio remains one of the lowest in Africa. This means Nigeria collects far less tax compared to the size of its economy. Tax reforms are aimed at broadening the tax base, reducing reliance on borrowing, funding infrastructure, supporting social services, and strengthening economic stability. Another major revelation from Oyedele concerns businesses enjoying tax incentives. He stated, "Under the new tax law, if you operate a business as an enterprise and you enjoy certain incentives, you have the obligation to disclose those incentives. This means companies benefiting from pioneer status, investment tax credits, industry-specific reliefs, export incentives must now declare these incentives when filing their returns or shortly after. Failure to disclose may be treated as misrepresentation." Government officials say the disclosure requirement is designed to prevent abuse. In the past, some companies allegedly claimed incentives they were not entitled to, failed to report incentives, or used incentives to avoid taxes indefinitely. With disclosure now mandatory, authorities can track incentives, evaluate effectiveness, detect abuse, and adjust policies. Tax experts warn that consequences of non-compliance may include monetary penalties, accrued interest, denial of government contracts, blacklisting, court action. As digital tax systems improve, authorities will increasingly detect non-compliant individuals and companies. Nigerians reacting to the announcement have expressed mixed feelings. Some say the process must truly be simplified, corruption must be tackled, taxes must translate into visible development. Others welcome the reforms, saying everyone must contribute. Tax evasion hurts national progress. A broader tax base reduces pressure on a few tax players. Financial analysts say Nigeria cannot achieve sustainable development without improving tax compliance. They argue no nation develops without citizens contributing. Oil revenue alone cannot sustain Nigeria. Taxes fund roads, hospitals, schools, and security. However, they stress that trust is key. Citizens must see accountability, transparency, proper use of funds. Experts believe Nigeria must move from a system where taxation is feared to one where it is seen as a civic duty. This requires public education, simplified processes, fair enforcement, and visible results. Oyedele's message signals a shift towards stricter enforcement combined with administrative reforms. If you are an employer, confirm that employee returns are filed, submit payroll projections, consult your tax advisor. If you are an individual, visit your state internal revenue service, ask about self-assessment filing, gather income records, and file by March 31st. This announcement is not just about paperwork. It reflects Nigeria's push towards economic restructuring, financial discipline, and sustainable governance. How Nigerians respond may determine whether these reforms succeed or fail.